Welcome to your Big Wealth Builders Ask and Anything monthly Q&A. Here we are in an extraordinary time. What another interesting year we're getting. 2022 is turning out to be a fascinating year from the financial side. You know, as we're emerging out of global pandemic and everything it brought with it, we're now getting to reap some of the repercussions of some of the economic choices that were made. And we're seeing some fascinating stuff happening in the stock markets. So we are right now, as we speak, the S&P 500 down over 20% on the year. The NASDAQ down almost 30%. Cryptocurrencies completely hit, and Bitcoin hitting its lowest lows in sort of 18 months. It's down over 58%, even more. And this can make things very jittery. So on top of that, we're seeing all markets, all sectors of markets, except housing markets are interesting, but they're so sectorized and in different areas of the world, you know, doing different things. But your broad stock markets really having seen a massive pullback. And in fact, a very overdue one. You know, at the end of 2019, if you were around there, we've known a lot of conversation with, and is the market too high? Is it overheated? Then we had all of the craziness with COVID. And then we saw the markets continue to go to sort of unprecedented highs, just keep marching on. So we've had an extraordinarily long bull run for basically since 2012. It's been over 10 years. As we came out of the 2008 dip, came on up, it's essentially been in an extraordinary and very extended bull run. So we're seeing stock markets retractions. We also, combined with it, seeing inflation in just about all markets around the world really running at all-time high. US, UK, Europe, hitting inflation numbers that haven't been seen again in 15 to 20 years. So this is bringing pressure on interest rates, economic hold. We're also seeing escalation in fuel prices, a lot of it due to war. And so with it, a lot of uncertainty, and no doubt with it, and obviously a lot of anxiety around all of our own money stuff. You know, no one, including me, despite having been in this world for the last 30 odd years, likes to see a big retraction on our net worth number. You know, we do our balance sheet and we update that little net worth number, which of course is the cumulative value of, if we were to sell our assets at this point, what would be the cash value we would get for property, for equities, for any of the different asset classes we own. And so one is always really to remember, it's a spot price if we were to sell. So you could be looking at your balance sheet just as I'm going to go, oh, this is awful, you know, a retraction of 25, 30% down on the year. So how do we manage this, and what sense do we make from this? The very first thing we really need to be doing is getting really clear on, where are each of us on our wealth journey? Are you starting out? Are you getting in place your great wealth chef habits of good, regular money management, giving your money direction, squeezing the juice, getting it so that your money flow aligns to wealth pie? So you've got money going into savings, into growth, into your freedom, and you keeping a grip on your necessities and keeping that well down to at 55% or below of the inflow. You're getting really clear on what the quality of your inflow is, how you can increase that by increasing your skills, the different ways you can work on that. You're getting more out of your expenses and making sure you've got quality and value out of the money that flows out your life, and you know what's going on there. So a key part of the activities of a great wealth chef is our day-to-day money management. What is our experience with our money flow? Then we look at the balance sheet side. So that is a result of our spend choices. How much of that money goes into our freedom, into our investments, our savings, keeping our debt blitz down, so we get into right relationship. So it's always important at times like this to remember that our investing is one component of being a great wealth chef, one component of living that wealthy life. because it's actually the moment by moment choices that we're doing and making that makes a real difference in the long term. That so often it's hard to just remember our longer term horizons when we get the information right up front here, but they do impact. So we've got to really say, okay, with what is going on in the world, what are the choices and the things I should be considering around my money flow? Okay, so inflation is going to be impacting your cost of living, the cost of where your money is going and what value you're getting from it. So you want to be going, great, what are my money flow actions that I can do? How can I make sure that my income flow is secure and stable? Can I diversify that? Can I bring in some other streams of income from another business, from other assets I could put in place so that I have more stability and security around that? From my outflow, where am I exposed to interest? So interest rates on borrowing. If I got debt, though the cost of that borrow is going to be going up, I need to be blitzing that debt like hell. I need to be getting consumer debt out of my life. Great. My other fixed expenses, where can I squeeze the juice of that? Can I negotiate on my utility bills? How can I reduce my energy costs? What are the things that I can do where I can still get value, but at a lower cost, so I'm not depleting that? And am I really getting vitality and those hell yeah expenses, where the expenses that are bringing me joy, and really clear on that, that is where I'm living the best, and making sure that then the other wealth pie elements of regular investing, building up my savings, building up my investments are happening. So that should be the first real start, knowing, this is where inflation's going to hit. Now we start looking at the balance sheet side and going, our longer term financial well-being, what is the situation there? So coming back to, where am I on my wealth journey? Am I starting out? And my starting out could be, anything from your first few years of investing to your first, quite a few years, but you're not yet financially free. You're still putting in place your habits, your systems, you're getting rid of debt, and you're getting your regular investing. You're building up your portfolio of assets across your different portfolio design. You're getting in place a habit of regular, consistent investing. And at this point, your most important focus is to be consistent, to stick with the strategy, and to actually go, yay, I am so excited that I get to live and invest and be a wealth builder in a big market contraction because I get to buy my assets cheaper. This is the mindset of the wealthy. They understand that, yes, corrections are friggin' fabulous because your regular money behaviors are buying you more assets. And we also celebrate the fact that being an index tracker investor means we don't have to worry about which sector, which market, which company is going to be impacted or not due to that investing and due to what's going on in the markets and inflation, because companies that underperform or don't succeed are going to drop out of the index, and those that do will go up in the index. So as long as we're buying the index, we're always ensuring we're getting the optimal shares of companies that we want to own. Now, if you're in the middle of your journey, so maybe you've now got a good base lump of investments happening, some of it happening in retirement accounts, some of it happening in discretionary accounts, some of it happening in tax deferred or tax-free accounts, but you've got your wealth management system going. It's rocking. You're in that stage of maintenance. You're adding new streams of income. You may be looking at new investment opportunities. You're looking at opportunities for leverage of how can you accelerate your time to freedom. But you've already got a capital mass invested. Now, for those of you there, one of the big things that can happen right now is a panic of going, oh no, this is terrible. Look, my net worth is reduced. My time to freedom is going to take longer. What to do? You can see costs going up. You might be anxious about, can you keep going at the rate you've been going? So again, the same principle applies. You're not yet at your freedom. The reduction that you've seen in your net worth is a paper loss. That is purely if you were to do something super stupid like A, sell your investments, B, stop your regular contribution. That is the big risk here, not what's happening in the market. Because if you're still building up your critical mass, you're still building up your net worth of assets in order to live off when you're financially free, You too are a net buyer. You're an accumulator of assets. And of course it's shitty, especially if you see the price of certain assets lower now than they were when you bought it. But we've got to take a longer term perspective and go, the most important thing now is to do consistent. Ever is when just consistency pays off. I must keep going and keep doing what I'm doing. So that's when you're investing. The thing you absolutely don't want to do is pause your regular investments, sell anything. Hell no. When we come out of this, and of course we come out of this, that's what markets do. Maybe it's going to be a year, maybe it's going to be 18 months. You will have, by continuing to buy through this time, own units at a lower cost, and you are going to really benefit from that as it comes back. And you're going to look back and go, wow, that was a great buying opportunity, like many of us do in 2008, when so many people pulled out the market, they panicked, they stopped investing, they sat on the sideline, and they missed a huge big bull run that followed, because that's exactly what will continue. So again, if you're in the middle, let's say middle stage of your wealth journey, your focus should be, how do you get rid of any unnecessary expenses? How do you get your wealth pie allocations sharper? That needs to be the focus. The focus needs to be on the outflow. How do I get more money? Where can I simplify things? Well, how do I get more value from the money that flows out of my life? So there's more money to actually buy assets with. How can I invest even more? How do I get rid of debt? And what's super important about this is, like, what can I sell? What else can I do? Not how can I rob my assets for that? And so really getting clear that, this is the flow. Where can I look at the things that inflation is going to be hitting me in and make some other choices, knowing that high fuel prices and the escalations that come with that and the knock-on impact is going to be something that you're going to be seeing for, I think, for at least a year to 18 months, the knock-on impact of this. So go through your expenses, see where that's affect transportation, heating, utilities. What are other options you can make? How can you use everything from energy saving bulbs to insulate your boilers and your heating systems, to just really go, well, how can I and the family make this a fun project? What can we also eliminate? Where can we negotiate insurances? Where's some of the squeezing the juice stuff we haven't done? So again, the focus needs to be there and making sure you're not taking on extra burden. What is so great about pullbacks, whether they're in any aspect of our life, whether it's also an opportunity, if we move house and we have to do a decluttering, or we've got to pack up stuff. When we have a pullback like this and a big shake-up in markets, it makes people go, hang on, nothing is ever forever. Everything goes through cycles. Everything goes through seasons. Things get born, things die. So where have I maybe got sloppy with how I'm choosing to live my life? What do I need to get rid of? What are some overheads and expenses? Do I need to go and do squeezing the juice again? What do I need to do to uplift and refresh this and come back to go, life is happening right now in this. What is the opportunity right now? It's an opportunity to simplify, declutter. This is not a time to start bringing on lots of new overheads, complexities, when we're going to be seeing this escalation going through. Stabilize, simplify, see what you can get rid of. And most importantly, so that's on your money flow, and then on your investment in your assets, most important, do not take on any consumer debt. Reduce any consumer debt that you have like hell. Any other things that create interest, see if you can negotiate those rates, see if you can get some fixed rates coming in if you absolutely have those. And then your assets, stick with your regular consistent investing and see if you can even increase it. Now, for those of you who are already at the stage of being financially free, you've now got you at or near your net worth number, you're at a position where you can be feeding off your assets. This is a really critical point to not panic. Remember, your assets serve you for a long period of time. When we see a little blip, 6 months, a year is a small amount of time in the big context of your life and your financial freedom. So this is why it's really important that you understand drawdown. And you might want to go back and look at what is your drawdown strategy. In Wealth Builders, we have a masterclass purely on drawdown. And this is why I have a year's worth of my living needs in cash already set aside so that when there are to be expected market pullbacks, I'm not having to sell assets when there's been a contraction and a retraction in price. So whilst it doesn't look good to look on my various portfolios and see all of those values down, it's more of an ego thing. It's more of a, oh shit, my net worth is less than it used to be, but it doesn't impact the quality of my life because the money that I need to live the life I want has already been set aside. And as part of drawdown strategy, we always have this rolling amount. Now, what it is going to start impacting for those of you who are already in, say, a 3-year drawdown pattern is as you start getting towards the end of the year, or whenever you do your mega money date, where you relook at and what to sell to release money into your drawdown pot, you can start making some choices and go, well, I don't want to be selling some assets when the price is low like they are now. So what can I do to my cash flow to not have to sell those assets, even though it's for a 3-year drawdown? So you could choose to say, okay, I'm going to hold off and maybe only have a 2-year drawdown buffer. You could also say, hey, what options do I have to top up the monies that I need with actively earned activities that I can do? Remember, everything's a choice. Can you take on some employment? Can you get, up that business you've got going? Are there some other income streams you could rather be getting? And also in your drawdown strategy, if you've got income streams coming from investment properties, from crypto yield fund, whatever it is, where from royalties you might have income coming in, are they being impacted? If they're not, you're going, great. That income is busy going into your reservoir. You can then make a choice and say, I'm going to hold off selling any capital investments that I need to top up that pot for, and review that in another 6 months' time. And so you can go. What you can also be doing is going, great, how do I also cut my cloth? How do I see this as an adventure to go, what is if you've been at an 8% drawdown rate, if you go to a 4%, where can you cut some expenses? Where can you cut some costs? Could you do a local holiday rather than an international holiday? Whatever that looks like. What is your spend forecast and what is your freedom number price tag? And where can you just give yourself a bit of a break? When we realize we are free to choose the lifestyle we have and want, this is part of our freedom. And so in retraction times, we can also go, hey, I get to choose how I'm going to spend that money. So again, a great opportunity to declutter and simplify. And most importantly, you stick with your regular investing. You stay with your strategy. You stick with what you're doing. And so when we have times like this of market pullbacks, of escalation and inflation, so people get paralyzed and either stop investing or want to change or think they need to change something with their investment strategy. But no, where we need to focus is our money flow and make sure we're really getting value and seeing where we can liberate that and doing everything to stay consistent with our investing.